CNN business section has something called the Fear Greed Index. They use 7 fear and greed indicators to determine where the market is. So right now, they are saying we are at extreme fear, which is cool because last year we were at extreme fear. So that's going to give us a chance to see what happened the last time we were at extreme fear. And also in this video, I'm going to show you what happened the last time we were at extreme greed, which was back in the June-July window. So let me clear up some of these drawings. Now, what's cool about this is that they give you an overview, but then they also let you click on this timeline. And in this timeline, they give you a nice way of seeing, okay, how fearful did we get the last time we were at extreme fear? So it looks like we got down to about 16. Right now, we are at about 25. So it's possible we can go 40 to 50% into the more fearful direction to reach exactly where we were back in October. Now, when we did this video back in June of this year, we were in the extreme greed territory. You can see here 73 to 75, and we peaked at about 83. So what I want to show is first is what happened the last time we were at an extreme emotion in the market. So note here that we talked about reaching extreme greed back in June. We peaked back in really back in the June, July window. Let's see what the market did. So as I said earlier, when we did this video back in June, we were right around here. You can see June here. So we had reached extreme greed in early June. And so what happened after that is the market took that and continued to stay greedy for about a 7% gain. So you'll see here that the market has a 7% gain from the time it reached extreme greed back in early June through the peak of extreme greed back here in July. And then things started to happen. They downgraded our credit rating. One of the US rating agencies, Fitch downgraded our credit rating. People started to worry about inflation again. And we started to get into this cycle about government shutdown. And so from there, all that's happened is that if we just draw a straight line down to where we are now, the market's lost about 7%. And that makes sense because we're basically where we were back in June. So the move we had up after reaching extreme greed, we went up about 7%. Now we're down about 7%. So we basically have gone nowhere since June of this year. So now we want to know, well, what would happen? Let's clear some of these drawings up. Now that we are at extreme greed again, what happened the last time we were at extreme greed? So if you look on this chart, we were at our extreme fear. We were at extreme fear back in March and extreme fear back in October. And just to show you on our S&P 5 or CNN Fear Greed Index, go over here and you'll see here that we reached extreme fear back in March, according to our CNN Fear Greed Index, and extreme fear back in October. So what we want to do, I've outlined those here, is see what happened once we reach those levels. So I'm just going to take our little trading view tool here, and you'll see that we nearly reached 19%. In fact, we did reach 19% if I just drew it all the way out. So once we reached extreme fear back in March, we went all the way up to about 19% before heading lower. What happened back in October? So here, back in October of last year, we hit extreme greed, extreme fear. I keep mixing those up, excuse me. So if I draw a line from our extreme fear point, we went up about 14%. So the last two times we reached extreme fear, we've gone up double digit. And if I really wanted to take it to the ultimate point before it went down, we went up about 17%. So there you have 3 advances off of the extreme fear point over the last 12 months. So how do we use that today? Right now, we are at extreme fear in the month of October. That's on the chart there. You can come over here, you can hit your overview, and you can see that according to this index, we are back in the extreme fear. Now, we're not as low as we were back in October of last year. In October of last year, according to our timeline, we got down to about 16. We're still hovering around 25. So there's definitely more room for us to get more fearful. But instead of giving into our fear, we may want to take heed that the last few times we hit extreme fear, we have had some pretty good performance in the following months. This by no means should be taken as a guarantee that we're going to have repeat performance. As you often hear, past performance is no guarantee of future results. But like all things in the market, there is a rhyme, a rhythm, a pattern that seems to hold up over time. And really, this is some of the underpinnings of the whole buy and hold strategy that you always hear when it comes to investing. The reason people don't buy and hold is because they get scared, or they get greedy, they get fearful, or they want to take their money off the table while they're ahead, and they either missed out on future gains, or they find themselves locked out of the market and buying at at higher prices, and just really messing with their portfolios. Next time, we're going to revisit what happens after we have 2 months of consecutive losses in the market. Since July, the market has gone down in August and September. Let's see what happens historically when the market does that, and see how that can help us become better investors. That'll be next time on our channel. Thank you for joining us. My name is Maurice Wilson. You can find me at wilsonwealth.com. Thank you.